There's one stock right now that I think the market still don't understand, and it reports earnings on the 27th of February, so only 1 month from now. And I'm talking about Fubotv. In the last year, this company has changed its risk profile. New owners. In this video, I'll walk you through why I invested in Fubotv and the risk you absolutely need to understand. Okay, this is not financial advice, it's just my personal analysis, right? Let's get into it. First, what is Fubotv? You can see here, Fubotv is a live streaming company, but it's not like Netflix is or Disney Plus or something. This is mainly sports. And you can see here for the last year, they have dropped down 36%. They got a market cap of about 3 billion at the moment, which is not a lot, but still not cheap, right? What is Fubotv? Let's have a look at it. Fubo basically is, their purpose is only sports. And we got sports like NBA, NFL, MLB, and college sports as well. Historically, Fubo, they struggled, okay? They struggled. Fubo struggled because sports is so expensive to buy rights to. And a year ago, they had like 1.4 million people who pays to them every month or something like that. So the margins were thin because they use a lot of money to buy these rights and not a lot of subscribers, right? So margins were pretty thin. They spent a lot of money. But this was 1 year ago, 2 years ago. Now it's looking completely different. So if we jump back into this one, you can see here that in October, November, Disney buys 70% of Fubotv. Okay, they buy 70%. Plus, they give Fubo $145 million in loans. Why is this important? It's important because before Fubotv had a lot of debt. They spent money like they were extremely rich, but they weren't. Right? There's one more thing that's very important. If you will have a look at this, this was the Q3 2025, 1.63 million paid subscribers and 369 million total revenue. That's alright. It's not bad, but it's alright. These results pertain to Fubo's standalone operations prior to last week's combination of Fubo and the Walt Disney Company's Hulu Plus live TV business. And why is this important? Because it's very important. This changed everything, which creates the 6th largest paid TV service in the US with nearly 6 million subscribers in North America. And outside of America, they have about 342,000 paid subscribers. But that's not very important. It is important, but it's not very important. The most important thing is the US. The Walt Disney Company bought 70% of Fubotv. They gave them 145 million in loans. Plus, they merged the Hulu Plus live TV business into the Fubotv. So now they have nearly 6 million subscribers instead of the 1.6. Changes everything. Because the newly combined Fubo and Hulu Plus live TV business creates a truly unique virtual MVPD and the 6th largest pay TV company in the US with nearly 6 million subscribers in North America. The combined companies offers consumers a broad set of sports, including more than 55,000 live sporting events and entertainment-focused programming offerings from Fubo and Hulu Plus Live TV, blah, 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 blah. The combined business expects to realize cost. So, because Hulu is now integrated into Fubotv, it means more subscribers, which they can get bigger deals and better deals. But it's not just bigger and better deals because they now can have some of the same people work on Hulu as they can on Fubotv, which means the cost is going to, the expenses is all going to decline from each business, right? If that makes sense, I'm not sure. And operational synergies through content cost savings achieved by more flexible programming packaging, advertising optimization, and sales and marketing opportunities. So what I hear is they are going to maybe do a combined program where you can pay like $150 and then you will get Hulu plus Fubotv maybe. So like a package deal. Very nice. The company will have access to a 145 million term loan that Disney has committed to provide Fubo in 2026 as part of the transaction. So not only is they going to get Hulu plus 4.5 million more subscribers, they also get a loan from Disney. But what are they going to use this loan on? We will find out. Streaming services by subscribers in the United States. So they became the 6th largest pay TV company. But if we have a look at the streaming services, Fubo TV is down here at number 15, and Disney Plus is here at 55 million. But now that they will have about 6 million subscribers each month, they will come here at 12. So they will be the 12th biggest streaming service in the US, approximately. Let's have a look at the Fubo revenue. Okay, so this here was with like 1.3, 1.6 million subscribers, 3.4 billion in revenue, 3.8 billion in revenue, 4.2 and 4.4. It's okay. It's okay. It's quite a lot compared, like we saw in the first slide, that they are only valued at 3 billion. And then the estimate says that they will go up to 6.1 in 2026 and 6.8 in 2027. But that's the estimates. I don't agree with that. I absolutely don't agree with that. If we have a look at my estimations, you can see here that it was 4.4 here, but I believe we're going to get up around the 7.8 billion in 2026 here. And in 2027 we will 9.8, 9.7 maybe in revenue, because that they get 4.5 million more Hulu plus live TV subscribers. Maybe some people are saying like, okay, maybe we don't want to be a part of Hulu because it's now become into Fubo TV, so they're going to unsubscribe. How many people is going to do that? Like 200,000, maybe 100,000. I'm not sure yet, because we haven't seen the numbers, and the numbers is on 27th of February. It's very important that you don't think it's Hulu. It's Hulu plus live TV. It's not the Hulu on demand business. So when you combined these two companies, you're looking at roughly 6 million total live TV subscribers on the one ecosystem now. And that immediately changes how the market should think of Fubo, because the market hasn't reacted. Fubo is down. Fubo is trading at $2.4 at the moment. It's nothing. Okay. Let's talk about the $145 million they got a loan from Disney. What did they do? They repurchased 140 million of the convertible notes due in 2026. That's only a good thing. If you look at this, the notes were repurchased at 100% of principal plus accrued and unpaid interest. So that's a good thing. So now they have less debt. I mean, they got debt to the Disney, but Disney owns Fubo, so I don't think they want the money back at like in the next year or next 2 years. Disney doesn't need the money. Okay, so before Disney, Fubo TV 1.6 million subscribers. After Disney, Fubo TV, Hulu plus live TV 6 million subscribers. And the stock down 33%. It's down. You can see here that when the volume jumped, that's when Hulu got merged into Fubo TV and Disney bought 70%. That was in November. The stock traded about 3.8 maybe. Now we're down to $2.33 or something like that. I don't get it. I absolutely don't get it. But then I thought, why haven't Hulu and Disney and everything been integrated or not has been shown in the stock price yet? You want to know why? It's because Fubo haven't released a quarterly report yet. They haven't, but they will. On the 27th of February, we will see the Q4 earnings from 2025 and the annual report, which is, I think it's going to be good. I think it's going to explode. So the next 2 quarterly reports is going to be absolutely huge, because in the next one we will see what the revenues look like, what Fubo is going to look like. Is it going to be a better company now? It's very risky. I think it's worth the risk. 27th of February. Why I think this is an absolutely, I think it's a good risk reward kind of scenario, because Fubo isn't going to decline. I mean, in my head, it doesn't make sense if Fubo is declining, because why would it decline when it get 4 million more subscribers? When the debt is down, they paid off the 2026 notes. Like, I mean, the cost is increasing because, I mean, you got a new platform, but it's still one ecosystem. So they can merge some of the divisions like marketing and sales. More customers equals contract cheaper per subscriber, right? So when they before paid, let's say, $20 million to get a right to a NBA college program or whatever, now they can pay the same 20 million, but now they get 6 million subscribers who's going to see it. So it's going to be cheaper per sub, right? But more customers also equals bigger deals, which equals more deals. Because the bigger the deals you have, the more subscriber you have, the bigger the deals you can get for TV rights. That's just how it is. But the more subscriber you have, the more deals you can make, right? Plus they're backed by Disney. I mean, Disney isn't going to let this Fubo TV and Hulu Plus Live TV is going to decline or go bankrupt. Never. Absolutely not. So I got the ChatGPT to make this risk of investing in Fubo TV. I mean, streaming is expensive. This whole streaming kind of era we are in, where Disney Plus, Paramount, we got Netflix, we got the Prime, we got everything. So there's a lot of streaming services, and streaming is expensive. Sports rights is also very expensive. Integration, execution always carries risk. So Fubo TV is going to integrate Hulu Plus Live TV into their business, and of course there's always going to be some risk, because it's the same management from Fubo TV that they had before this merger. It's also very competitive in this streaming service business. It's very competitive because there's a lot of players out there. What you can also say is, like, backed by Disney. That's a good thing. But the other thing is, Disney owns 70% of the shares. So if they say, like, we don't want Fubo to be making a profit, we want Fubo TV to lose a lot of money, we're going to back it up by loans, but we're going to want Fubo to lose a lot of money, but they have to grow really fast. So they are going to get more subscribers and get more of a market share in this streaming platform, whatever. There's risk in this, but I think the risk reward is pretty good. So I just bought yesterday. I bought about 1,040 shares, average cost of $2.26 a share. You can see here, this is one of my portfolios. You can see here numbers, 1,040 shares. I gave $2.26. Today it's up about 4.5%. So that's not a lot of money yet. But I think it's going to be very interesting. The next month is going to be interesting, the 27th of February. But it's also going to be interesting in the Q1 reports in April, May, about there. That's also going to be interesting. I think this stock could probably go to like $5, $6 at the end of the year. I invested some money in it. Now let's have a look at it. So, I mean, it's a risky stock. You never know what's going to happen. Let me know in the comments, are you bullish or bearish on Fubo TV? Do you think they're going to perform well when they got Hulu Plus Live TV integrated? Or do you think it's going to zero? We never know. Please leave a comment down below. Thank you. Bye bye.